In today's insurance news, there's a ton of stuff happening right now. Obviously, the rates are going up in a lot of places, and we're going to dive a little bit into that, but more so some of the pieces that are going to impact you as an insured. And a couple interesting pieces. Starting off, we've got AM Best has affirmed that Kemper is actually having, because of all of the rate increases, they're starting to investigate and actually lowered their ranking for stability. That's a little bit scary. That's the first step to becoming insolvent, although we do have to give Kemper a little bit of credit because they're one of the first companies to get approved for a 30% rate increase in California, although not great for customers, good for the company's bottom line, where they can hopefully get stable again. The other part of the scare is because Kemper has also made some drastic changes where in our last video, they stopped all preferred business for personal lines. So home, auto, and umbrella policies, their preferred line is no longer existent. They're just doing the standard type of insurance. Moving into the all-powerful debate, men versus women, or whatever you want to say, it's essentially with insurance, they haven't really caught up. So you're either listed as male or female, and some of them are starting to change that a little bit. But essentially, who pays more for car insurance? Well, let's dive in. They actually go over a couple different pieces. There is a point to where men are almost as good as women as far as the price goes. Men are at a higher risk of having claims than women are. So women, you win this debate. You are by far less expensive when you're just starting off. The teenager boy is about almost $5,000, where the teenager female is about $4,600 for the car insurance. Where that gap starts to play a piece where it matters less is when you start to get to the age of 32. A 32-year-old male is about $1,846 versus the female, which is $1,831. So you're only seeing about a $15 gap between them, and it differs in different states. Obviously, there's all the rating factors, so the type of car, where you live, the age, all of that does play a factor, but across the board, the male versus female discussion, females, you won this battle. Next up, we have State Farm. They were accusing a woman and suing her for leaving her stove unattended. She essentially started a large fire in Belleville and caused a lot of damage. So State Farm is actually suing her for about $68,189 to recoup the money that they had for this claim. Now, they're also included any other relief, and they even threw it to the judge to say, if you want to add more to it, if you deem anything that needs to be responsible on this person's part, then we need to have that included as well. Let me know what your guys' thoughts are. If you left your stove, which commonly people do, is that allowing you or putting you in neglect? In this case, they're saying that it is. Or do you think that this person should be held responsible and pay the $68,000 that State Farm is claiming that she now owes? Now, I know a lot of people think of Florida when you think of hurricanes, but hurricanes do matter. And in this case, is actually California was having a flood. This was an article that wanted to talk more about, are you covered for the type of weather that's correct? So essentially, do you have the coverage for a flood claim? In most cases, no. Honestly, your policy doesn't typically cover a flood unless you add that to the policy. So in California, specifically in this article, they do talk about the difference of property damage versus wind and hail versus all of the types of coverages. And we have a video that goes more in depth if you look at our Insurance 101. Maybe I'll link that at the end of this so you guys can see it. But it goes over what is actually covered on a home policy. In this case, in California, even if it's a natural disaster, all of those cases, unless you have a special coverage listed on your policy, which almost nobody does in any state in general, the California does actually have a nice little benefit, which I'll link in the description below. There is a disaster loan assistance program. Now, it's not a forgivable loan, but they'll loan you up to $100,000 to repair, replace any clothing, cars, or appliances. So anything that's deemed a disaster, if it's destroyed in that disaster, you can apply up to the $100,000, where they'll help you kind of get back on your feet and get going. And with that same note, a lot of people are actually leaving the California. We're hearing a lot of Florida being left, but in California specifically, 2 more carriers have just decided that they no longer want to insure the state, and they're out. They're completely leaving the state, which follows suit with the majority of major companies. We already saw State Farm essentially stop writing policies. We've seen farmers have a limit on the number of policies that they can write. We've seen Chubb start to limit the pieces that they have. We've got several articles on this channel that go a little bit further in depth than that. It's actually one of the more popular videos. But we're now seeing 2 other carriers, AM Guard, which is a larger carrier, It's a subsidiary of Berkshire Hathaway. It's called Guard. We've actually had our agency use it as well, and they're non-renewing or stopping about 900 policies. Not a huge impact as big as the state is, but it doesn't help when you have an insurance company. You're essentially starting to realize that you can't go anywhere. This AM Guard leaving also is Falls Lake. I've never honestly heard of Falls Lake, so they don't even put the numbers in here on Falls Lake. I think they're just kind of a small guy that jumped in the boat and decided they don't want to swim anymore. So they're essentially backing out of this state altogether. Other news, a woman recently was killed by her husband. A dentist decided that he needed the insurance money. Now, a lot of people see these photos and be careful because these articles are meant to grab your attention. But this is actually from 2016, a lawsuit that had happened. And this is a 68-year-old male. So this is actually somebody that's not a 20-year-old that they're showing on here that just they went on vacation, right? So what happened was a dentist from Pennsylvania essentially went on a trip with his wife, a hunting trip, and she ended up getting shot in the chest and essentially died from it. She had wounds that weren't healable. He's claiming or claimed that it was her putting the gun away, but he actually was caught actually having the gun and putting it back in the bag, and then essentially he shot her. So whether it was a mistake or not, the way he claimed it and the way that he said it was totally different. That's one thing. The other part that this article goes into is actually what he ended up doing. So if you come down to the bottom of this article, essentially what happens is he started to go on these extravagant lifestyles. He built a brand new house. He got some fancy cars. He started dating the secretary and essentially retired from the practice. And so he's living the life of just wealth with the money from the life insurance. Well, they've officially said that, nope, this is actually a death sentence that he had given his wife, and now he's getting life. He's going to prison for life, and he's awarded to pay back $15 million for penalties. Now, the question is, where does that money go? I don't believe it goes back to the insurance company. I'm very curious to know more about that. The part that we didn't mention in the article was actually a big piece. Farmers Insurance is on the hook or being reviewed to be downgraded. Farmers Insurance is massive. They're in the top 7 across all of them. And there's hundreds, if not thousands, of insurance companies. Getting downgraded in a ranking is very difficult and an unfortunate piece, which usually means that they've got to lay some people off. Now, it depends on what Farmers does with this, but Moody's is reevaluating them. They're placing them on a review to downgrade because of underwriting reasons. Farmers has stated in here that they are heavy on the service team. They're heavily susceptible to major claims. So when a major claim happens, because they have so much of a staff, that they do get larger claims come through and they get hit harder on their budget. So their stability, the ability to pay, the underwriting ability is going down possibly. According to a quote from Moody's, they are actually focusing on the downgrade from a perspective of profitability and capital adequacy, as well as the efforts to reduce the catastrophic exposures. So if Farmers can't show a plan to get out of this situation, you're going to see their ranking drop, just like we saw Kemper, where they went from an A to an A-. It's not the end of the world, but you don't want your stability of a company to go down, because when you're trying to sell policies and show that you're a strong company, can I pay for this claim? It doesn't help that you've gone backwards. Their combined loss ratio, by the way, if you're curious, was 113.9%. What that means is they took $100 in, they paid out $113.9 back. So they're losing money pretty heavily. It's a lot different. That was the first half of 2023, where they were only 105.9% of a loss ratio. Still not great. We know that they've been struggling previously. Honestly, insurance companies are trying to get below that 100%. They want to be in that 85 to 90. I mean, they want to be zero if they can, but they got to get below that, because when they're investing their funds and trying to make their money on the back end, they can't, because if they're paying out more money than they're taking in, something has to change. In our last article, Aaron Rodgers is officially no longer sponsored by State Farm. So he had what they estimate to be about a $3 million a year deal, as no longer, they essentially have kicked him out of the group. They do wish him the best, which is unfortunately the part that everybody says as you get older and you start to get towards retirement, or you're just not in the limelight. They've already been leading more towards keeping Jake from State Farm in the limelight, and then Patrick Mahomes as well. So essentially, they're kicking Aaron Rodgers out and saying, we wish you the best. Aaron Rodgers has not always been the greatest to work with because back in 2021, they had some pretty big conflicts. Aaron Rodgers went on a show and said essentially that he doesn't believe in the COVID vaccine, especially for his body. And it makes sense because he wants to challenge his body to the max and yada, yada, yada. You can look that up later if you want, but they had to come out and actually pause or stop commercials from State Farm because of the backlash. So they did end up losing money because of that. Whether that's why they're firing him, we don't know. Why they're separating from Aaron Rodgers, we really don't know. Or if it's the fact that they've had a 12-year run with him and they're essentially moving him on. If you've had a 12-year run, I get it. Since 2011, maybe the market isn't calling. It's just like a TV series. If that TV series doesn't get the eyeballs and people aren't reacting or interacting with it, then there's not really a reason to have it. Let me know what your thoughts are. Do you think Aaron Rodgers has essentially disappeared in most of the commercials, or do you think State Farm should keep him on? Once again, this is a new format. I want to know your feedback if you guys like this format. If you're new to insurance and you're looking for insurance quotes, I'll put a link in the description below. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.